Hey there, I'm Adam Chapnick with the Security Token Academy. Today we are pleased to bring you a corporate member interview with StartEngine. The company is a gold corporate member of the Security Token Academy. StartEngine is the largest equity crowdfunding platform in the United States. The company is also a FINRA approved broker-dealer and ATS. In this corporate member interview, we'll be speaking with the one and only Howard Marks, the co-founder and CEO of StartEngine. Howard actually joins me now in the studio. It's great to have you back.
Thank you, Adam.
Welcome. You're like our returning champion. I feel you've been here maybe as many times as anyone. We love having you. So for everybody who is a little bit late to the party, can you share with everybody what is StartEngine and why you guys decided to make it happen, and why did you get into this game in the first place?
Well, here's how it happened. I'm from the game industry, as you know.
Yes.
It's co-founder of Activision, and been in that industry for a long time, and felt strongly that I wanted to be helpful to entrepreneurs. So StartEngine initially was created as an accelerator, a school for entrepreneurs. We helped them achieve their dreams by investing money in their very early stage. And this was an amazing opportunity. We met hundreds of entrepreneurs. We've invested in 59 companies. However, in many cases, they couldn't raise any more capital, and they would not continue the business. They would shut down, and it was very distressing for the entrepreneurs, discouraging, and capital became a very important thing. So just then, as we were thinking about how do we solve this capital problem, the Jobs Act was voted in. Obama signed it in April 2012, and we looked at it and we said, wow, this is going to be a game-changing, because for now, for the first time, you have ordinary investors can invest in highly risky startups. And we felt, well, if we could put together a solution for that, that would be amazing. So we looked at the crowdfunding industry, and we looked at Indiegogo and Kickstarter, and wanted to be inspired by what they did. So we decided to build something similar, but instead of sending someone a t-shirt, we actually issue shares and securities. And that's how StartEngine just got started.
Yeah, and you guys really were one of the pioneers in the space of transforming how founders are able to generate, new sources of capital, and you continue to lead in that way. I recall last time we spoke, you were entering the process of becoming a broker-dealer. So can you describe why you decided that was an evolution that you guys needed to undertake, and what benefit does that present, and does it have any challenges that go with it?
Well, I'm glad you asked the question. So a broker-dealer in this country is a very big deal. You have to have the SEC has to review your application. FINRA, which is the regulator, is going to have to approve your business plan. It's a lot of work. It took us 2 years. Cost quite a lot of money in legal fees and all the effort and time we have to spend. I had to do a lot of exams myself, and other people in our group had to take exams. And all of this for what? It turns out that being a broker-dealer gives us an elevated status, allows us to work with customers, help them structure their offerings, we get now a commission, but we can also work with more states. There are a lot of things that we saw as a benefit. To the customer, more importantly, they know now there's an entity, a financial entity, the broker-dealer, that actually stands side by side them in figuring out the best way to raise the capital that they need using Regulation A+. That's the main, I would say, regulation that we're going to be working with.
So for those who, for some reason, maybe haven't been following our show closely enough, can you summarize why is Regulation A+ an important one to look at, and how does a broker-dealer relate there?
Well, Regulation A+ initially was simply created for companies who want to raise capital. So what they do is they file with the SEC an offering memoranda. SEC reviews it, and once they qualified, they're technically allowed to put together a website with an invest button and say, hey, come invest in my company. And they have to do the marketing. They have to go out and figure out the strategy, how to do it, how to bring people to the page. And then once someone clicks the invest button, they have to figure out how to capture banking information or the credit card information, whatever that is. That's a lot of work. That's a lot of work to put on a company whose business is not in the business of raising money, whose business is running their company. And so Regulation A allows a company to raise up to 50 million
50, right.
a year. And we did the first one. It was a company called Elio Motors. We were not a broker-dealer then. We just did it as a fixed fee kind of deal, but we couldn't structure the deal. We couldn't offer any advice. That was a whole different world.
Right.
However, it was very successful. We raised $17 million, close to 17 million from close to 7,000 people. It was interesting.
The talk of the town. I remember it was a big deal.
And as a broker-dealer now, things are a lot different because now we can sit down with our customers and we can talk about not only their business, but also about the marketplace and about the best way to go about with the offering. It's a big difference. And the downside, is regulation. Everyone in the company has to abide by a lot of different rules. There are about 3,000 of them, and it's hard.
So you've set yourself up now to be sort of a destination where an issuer, let's say, whether you're a company or whatever you want to call yourself, if you're an issuer, you can come to StartEngine, and you guys are enabled to help kind of all across the board with the process of getting from I need money to I have money, basically. Correct?
Yeah. Yes, that's correct.
Yeah.
So from the time you say, okay, look, I want to raise several $1 million. Okay, let's look at what this raise would look like. Let's look at your company. Let's structure it. Let's figure out the best terms. And then we go. Then they file with. We'll help them with the filing. We can even help them hire an attorney. They need a CPA for the audit. All of these moving parts are important.
Yeah.
And we look at ourselves as really the ones who can organize that whole structure, to make sure that the company doesn't waste any time, to make sure that the decisions that they're making make sense, so we can provide that advice. We have the ability to do that.
Right.
And once the offering is live, we help them with the marketing. We have a lot of experience. We've done hundreds of offerings. So we can help them understand what are the best things to do for the marketing. Now, on top of that, we have our own audience of 200,000 plus registered users, who many of them are investors, and they can come in as well. So we've combined the two together, this whole concept of being a broker-dealer, but with that modern touch.
Yeah.
The modern touch of having the ability to have a huge audience that we already have.
Yeah, that is sort of what everybody has thought would be the inevitable kind of holy grail, is that the Reg A Plus structure that lets you generally solicit, but with someone who's allowed to go out and help you get the money, who also is allowed to help you do all the things you don't understand. It's a big corner to have turned for you guys, so I congratulate you on that. Now, as far as, here we're called the Security Token Academy, so we love to talk about specifically how security tokens can be used in these kinds of situations. But maybe you can share, there's some interesting wrinkles in the fact that you're broker-dealer and that a lot of people want to use broker-dealers but also want to use security tokens. How do those two mesh or not mesh?
Well, here's the reality is, as a broker-dealer, FINRA reviews our business plan, and they have to approve it. And we cannot just go out and do anything we want. Now that they've approved our broker-dealer, we can't go out and say, oh, you know what, we're going to also be offering national market securities. No, that's not part of our product line. That's not what we've been approved. And so far, we've approved to be able to do Regulation A offerings. Great, we're so happy about it. There's some other things we're doing that I'm sure you're going to be asking questions about that will be enhancing our broker-dealer. But one of them that we don't have right now is the ability to issue securities as tokens on the blockchain. That is not part of our product line. Will it be in the future? I think it could. And we will certainly work with FINRA and of course the SEC to talk about best practices, best ways to do it. I think when you look at the Facebook challenge that came recently in front of Congress, I think that illustrates the disconnect. You got a major corporation in our country that touches 2 billion people that says, look, we're going to be doing crypto. We're going to have it housed in Switzerland as an association. We're just a member. We're not part of it. It's not a big deal. What do you say? And the reaction was pretty negative. But what it did illustrate is the disconnect. You got business that wants to use crypto, and you got Congress, you got the regulators, the SEC, who are thinking about it, but nothing has been really finalized.
So what about that with the SEC and the regulators? What is your opinion, having maybe you have maybe the best seat to view the evolution of regulations on this subject of anybody. You've been there since like day -1 to today, and you've been in there. Is it proceeding appropriately? Is it too harsh? Do we need more? Do we need less? Are they off the reservation? Where do you think what's the state of regulations right now?
Well, the regulators, on the basis of communication, are very friendly. Say, look, we put together a unit just to deal with digital securities and tokens and cryptocurrencies. Come and talk to us, which I think is great.
Yeah.
So they have an open ear. But there's a difference between, hey, come and talk to us, and here's a regulation you need to follow. And that regulation that you need to follow is not quite there yet. There are ways to get things done, but for a broker-dealer, it's different. We, again, have to abide what we've been approved. And so if we haven't been approved to issue security tokens, we can't issue security tokens. There's no way around it. And so, yes, we will go back and talk about it, and there's absolutely a lot of interest in it. And I think, even with the Facebook illustration, that shows how big enterprise, small enterprise, they both have different interests. And the government is going to help figure out a solution. And we're part of the solution, of course, because we're a member of FINRA, so we can put in our interests, our desire, and we will do that. But until we're approved, we're not doing it. So it's basically an ongoing process.
Yeah, and obviously we're going to have you back frequently to keep us updated on that. But meanwhile, tell us how you do work with an issuer, a young company that's looking to raise money. What's the process? How can they work with you?
Well, the process is pretty simple. We have 2 product lines really that are important. The one is what we call the $1 million rule, is regulation crowdfunding. And you can raise $1 million from the crowd. The good news with that is you don't need an audit, so you just need your financials to be reviewed by a CPA. That's really inexpensive. We file the offering. It's called Form C. We file it with the SEC. We do all the review, check due diligence, make sure it's okay, and then it goes live on our platform. And the company can raise up to $1 million. And we help them with the marketing. We help them figure out, how to engage their community, advertising, all the different elements. We're as soon as the offering is live and it goes over $45,000, an email goes out to the entire StartEngine community so they can be aware of it as well. That's working great. We've done a lot of them.
Oh, really?
And we're pretty excited. We've raised, actually, between regulation crowdfunding, regulation A, over $100 million for companies.
Tremendous.
So regulation A, as we discussed it, is $50 million, but you need the 2-year audit, and you have to have the attorneys, and you have to have the SEC qualification. But regulation crowdfunding is actually very accessible and very, very well put in place by the SEC. So we're very happy about that, and our customers are happy. But however, once they get to that million or close to that number, they need more capital. So they have to switch over to the Regulation A+, which is now where the broker-dealer fits.
Sure.
So for the regulation crowdfunding, that's the funding portal, StartEngine Capital LLC, and then once you want to go to Regulation A+, that's the broker-dealer, which is StartEngine Primary LLC.
Got it. And is that how does that appear? Like, is that a seamless transition that, as far as the investor community understands, it's just more is available, or is there a whole new offering? How does that? What's the experience to an investor of an offering that shifts from Reg CF into an A+?
Right. So there are 2 different offerings. That's the answer. So it's same company, 2 different offerings, and we explain clearly on the screen where this offering is being issued. Is it StartEngine Capital, so it's basically a $1 million maximum, or it's actually StartEngine Primary, you have that $50 million or whatever the company chooses to raise.
Got it.
And we're very clear, and we want to make sure that the investor understands when they put their money in, which company they're working with.
Yeah, that makes sense. So from where you're sitting, how difficult is it now for early stage companies to raise money in any of these sort of methodologies?
Well, my opinion is this. So we look for 3 things for a company. And you know, everybody's welcome to come and raise money, but we look for three things.
Okay.
So the first thing is we want a CEO that's willing to put themselves out there. That, you know, really engaged.
Front man.
Man or woman, but really engaged, really willing to go out there, no barriers. The second thing is we want a compelling offering. And compelling offering doesn't mean the company is necessarily compelling, the offering is compelling. They have to offer something that is really unique, interesting to investors. And the third one is they need a well-defined audience. Really clear who the audience is, because that's how you do the marketing, right?
Yeah.
Once we have those three things in place, we believe they will be successful. The first one, the CEO willing to put themselves out there, is probably the most important one, because it really drives the energy and the day-to-day actions that the company is going to undertake to raise the money.
Sure. So what are the steps now? Now, people have heard what you're talking about. I'm sure they're all getting excited because it sounds possible. And a lot of people in the early stage community that we talk to, a lot of kind of throw their hands up. It's like this alchemy that they can't figure out how to get from here to there to get to raising the money they need. What are the actual steps if someone is working with you to get started launching a campaign?
Well, we believe it's pretty simple. However, it's not easy. But the process is they contact us, they go on our website, let's say StartEngine.com, they fill in some questions, we have a conversation, and once it looks like they're interested, they sign an agreement with us, and then we onboard them. The onboarding is where it's not that simple. That means legal documents, financial documents, quite a lot of information needs to be given to us. We try to make it easy with a beautiful website, onboarding, it's simple, but and yet it's the first time they do it. They're doing it, they need hand-holding, and we offer that with our account managers. They get a lot of hand-holding. Once they're kind of ready to raise the money, we have a crowdfunding strategist, the crowdfunding strategist, who's going to go in and work with the company to figure out the strategy. What are the steps from communication, working with their existing audience, building an audience, finding an audience, advertising, PR, all those components are part of a campaign. And the campaign strategist will put it together and work with the company.
Amazing.
Once it goes live, it gets implemented as they raise the money. Let's say they are successful, they raise the capital they were looking for. At that point, we're done.
That's amazing. I didn't realize you guys have that hands-on sort of intermediate approach where you kind of mentor them through the entire strategy process. That's fantastic.
The companies need the expertise. It's the same way as if I said, hey, this new thing called social media, let's work together on it. Well, for many people at the beginning when Facebook was early on, they did not understand how to use it. And some, I would say, companies came out very quickly into the marketplace with expertise on how to help companies get up to date with it.
Yes.
And in a way, our role here and expertise is to help companies understand how to raise capital for their company, which is pretty important, directly from the public using equity crowdfunding, which is what StartEngine is doing.
Got it. Okay, so what about from the other side? What's the experience from the investor's point of view? Countless people I know who want to get into early stage companies but don't know how, where, what to trust, how would they get involved as an investor through StartEngine? Is it an easy process? Do you recommend a slow process? How does that go?
So typically, a potential investor will hear from us from the company. The company is going to do the marketing, and they will get to the campaign page on StartEngine.
The company, you mean the issuer or the
issuer?
Company? Okay, got it.
The issuer will, I call them companies.
The company.
Because it's a little less technical.
Yes.
And they will market themselves on Facebook, on Instagram, on public relations, Google, all those different channels, email, mailing lists, and these investors will come to our page. And they'll be introduced to the company's offering, but also to StartEngine. And they click, let's say, invest, and now starts a process where they have to put in their information. And they can use their bank account, they can use a credit card. For the smaller offerings. The $1 million rule, they can use also crypto to the Bitcoin, Ethereum, to the extent that the company is willing to accept it.
Got it. That's great.
And all of this we've designed to make it really easy, very easy for an investor. And once they complete the process, then the money goes into escrow, and there's a whole process for understanding if it's the right investment, if all the different details.
And in both your Reg CF and Reg A Plus, there's no accredited requirement. It's Main Street, retail. Anybody can invest that's interested, correct?
That's correct. So the reason I wanted to do it and decided to go forward and do what we're doing here with StartEngine is only because now ordinary people are able to invest. So think about this. Before the Jobs Act, first of all, you couldn't publicize online any of this stuff.
Right.
Okay, so what? Only wealthy people or experienced investors were able to access those interesting companies. That's great. That was then. The new is now everybody can. And that's what made me really interested in doing this, the democratization of capital. The idea that anyone can go in and make an investment feels great. Now, we also understand it's highly risky, is very speculative. The risk of loss of the investment is there. And yet, people want in. They want in because the journey, because the perks, because what the company is trying to achieve. They want in. And we want to help that happen.
Yeah, that's great. So what happens, you say sometimes it's well, it's always risky, but sometimes obviously the risk, it doesn't pan out. What happens if well, I guess before it doesn't pan out, what happens if a company doesn't reach their funding goal? What's the mechanism then? Do they keep the money that they did raise? Do they return it?
Well, if a company doesn't meet the minimum goal, then the campaign ends and the investors get their money back.
They get it back. Got it. And so, what happens in the end to people who have there been any positive outcomes with companies that maybe it didn't work out in the end, where they took investment, they went as far as they could, and it didn't work out? Are there is there anything beyond? Oh well, you're just out of luck. Do you find any repeat users that people come back and raise for another company? How has that been panning out in the marketplace?
Well, typically, if they fail their campaign, there's a moment of retrospection, trying to say, okay, what happened? Why wasn't I successful when so many others are successful? That's really on the entrepreneur to figure out.
Absolutely.
We don't provide advice on the business in general. We help them with the capital needs. To the extent they want to come back and try again, fine.
Great.
That's great.
So back on the investor side, is there a minimum or a maximum that an investor is allowed to invest, either because of your rules, the issuer's rules, or the SEC?
So the company will decide what the minimum is. So some are saying $100, some $500, some $1,000. It's kind of that range. In terms of the investor ability to invest more, it depends on their profile. So for the $1 million rule, the rule is very simple. It's 5% of your income or assets with a minimum of $2,000. So whatever is greater, $2,000 or 5%. But that's across all the deals in 1 year. So if you invest in two deals, your 5%, let's say it's $5,000. So you can put up to $5,000 in multiple deals, but that's it per year. And that's the company, the investor will say to us where they're at in their process, and they have to disclose it. Under Regulation A plus, it's 10%, and it's in that deal. So 10% of the income, 10% of their assets in that one deal. Now, for those, and then for the $1 million rule, the maximum is a $100,000 investment. No one can invest more. And the way it works is if you're accredited, which means you're wealthy, you have a lot of assets, you have a lot of cash, you still are limited to $100,000 with the regulation crowdfunding, the $1 million rule. But with the Regulation A+, there's no limit at that point for those wealthy investors.
Got it. And then how can they transact? You'd mentioned that in the Reg CF, they could use crypto. In Reg A+, that's not allowed, correct? Was it credit cards? Are people wire transferring? Is it all of the above?
Most people are choosing credit cards to invest. It's convenient.
Get the points.
They get the points. It's very simple.
Interesting. And so is the crypto allowed in Reg A Plus or not? You can.
Well, that's the broker-dealer that we have.
Yes.
We don't have the permission to accept crypto, but a company can have their own offering on their own website and accept crypto to the extent maybe another broker-dealer was able to get that approval, then they could do it too.
Got it. So how about some of the campaigns? Can you discuss any of the success stories? How many of you guys helped get funded?
So we've helped over 200 companies.
200?
Over 200.
Amazing.
Successfully.
Wow.
Raised capital, over $100 million was raised. We're trying to instill in our companies a behavior. And the behavior we call is always be raising. ABR.
ABR.
And why ABR? Yeah. It's very simple. So we feel that companies have capital needs on an ongoing basis. And the old school, the old ways of doing it is you raise, let's say, $1 million, and then you have to build, make metrics, get metrics, go back and raise more. And by the time you go back, maybe you're down the line, you're about to end your capital, your cash. And we see that all the time. And then you raise another, let's say, $5 million, and you repeat the same behavior, and then you get to the point where you only have a few months of cash and you're desperate to raise more money. We think that's not a good idea. The best idea is you put your first $1 million raise on StartEngine, you raise as much as you can, you continually raise. If you don't get to $1 million, keep raising. Keep raising, even if it takes you a year. So what? Keep raising, keep engaging the customers, keep getting more capital. And then when you get to the Regulation A, same behavior, keep raising, don't stop, never stop, keep raising. Your company's doing great, the price of the share is going to be higher. Keep raising.
Interesting.
Don't stop. And we believe that's a formula that will give the companies more success.
I love it. I love also that it goes to, I think, David Mamet, the always be closing for their Glengarry Glen Ross, I think. But so what about and do you have any favorite, I hate to say favorites, but do you have any notable sort of success stories, any the clients that have been successful you can share that you thought were interesting?
Oh, absolutely. One of my favorite one is Procom. They are run by a woman called Dawn Dixon, and she's fantastic. And they went on our platform and they raised $1 million. They went to the maximum. She was so engaged. She put herself out there. She went the whole way. She went on radio shows. She got PR. She really engaged the community. And yet, for a women-driven company, it's not easy to raise capital. We know what the statistics look like. The venture capital market is about 2% of the capital goes to women-led companies. It's not great.
No.
And then she's a woman of color. So she, add all of that to it, it's just hard.
Yeah, fantastic.
Really hard. Really, really hard.
Yeah.
You know what? I love it.
That's great.
Democratization of capital, allowing anyone, regardless of their age, their gender, their race, whatever their beliefs are, whatever that is, regardless of the person, what counts most is their mission, the ability to communicate their mission, what they're trying to achieve, and enroll these amazing investors who are going to participate. And that really is fundamental to what we do.
Preach, Howard, preach. I love it. Well, how about news or product announcements from StartEngine? Anything you guys have to share?
Yeah, absolutely. So what we're going to be launching next, we've announced those plans quite a long time ago, is a trading platform. So we're in the midst of getting approval for our alternative trading system. It's basically ability to, once you bought the shares, to have a way to trade them.
Yeah, liquidity, amazing.
Right, people call this liquidity. It's very important. Why?
Very.
Because investors who participate may not have 5 or 7 years to wait for the company to get sold or to go on the public markets like the NASDAQ. It takes quite a long time for companies to do it. And usually you have to become a very, very big company. For investors who want to access early stage new ideas, they need also liquidity. It actually enhances the offering. It allows the offering to be even more exciting for an investor because they know the liquidity is not just an if, it's more certain, right? Doesn't mean it's going to be a higher price per share than you paid for.
Right.
there's no guarantee on price.
There might be a price. Is a nice
there
thing.
will
That's
be
good.
a price. There will be a demand.
Yes.
There will be a supply-demand curve on the shares. But there is something. And so we call it secondary. That's the name of our trading platform.
great.
And we are launching it hopefully in the next few months. And we're very excited about it. And we think it's a game changer.
That is. And it also, having all this infrastructure set up, should you ever cross into the world of STOs, that's going to be just as exciting in that world to have this ATS set up that could possibly provide liquidity there, should you ever venture into that world. And we would definitely be interested in following you into that world at Security Token Academy. So what's next for the StartEngine? Any goals for 2019 that are sort of out there that you want to share? I mean, obviously you have your ATS coming. That's got to consume a lot of your time. Anything else you want to share about that?
Well, we're pretty ambitious, frankly.
Yes, you are.
So we raise our own money on StartEngine, by the way.
Right.
So we're financing ourselves with our own company.
Terrific.
We believe it's important because we want our companies to know that that's leadership, that we're doing the same as they are.
Yeah.
We are ourselves our own customer. We go out there and we talk about our company. So we have an offering right now that is really, that's open, that's since February. Last year we raised $5 million in our offering using a Regulation A+, and this year the goal is $10 million. So we're pretty excited about it. We believe that the capital is going to be used for growth, helping the company go to further steps. The secondary marketplace, pretty exciting. We're going to be announcing soon probably the ability to allow investors to use their investment retirement accounts, which is the IRAs, which a lot of people have. We're trying to innovate constantly. We also are trying to find more companies to come on StartEngine. All of this is a tremendous amount of effort, and our team is dedicated. And we've announced our mission, which is to help entrepreneurs achieve their dreams, but we've also announced our vision. Our vision is to help 10,000 companies raise $10 billion in the next 10 years. And that's basically driving us forward.
I love that. Say that again. 10,000 companies, $10 billion in the next 10 years.
Yes.
All right, we're going to hold you to that. We like that. So how about in the ecosystem? We love to kind of learn about who else, it's easy to hear about successful visionary companies like StartEngine because you guys are out in the front, always have been. What other companies do you guys rely on in making what you do possible?
So one of the companies we work with closely with is Fund America. They also own Prime Trust, which is a bank, and we've worked with them since the beginning, and they're great to work. And Scott Purcell,
yep, also a gold corporate member of the Security Token Academy,
which is great.
Yep.
We're happy to hear that. And we also have great attorneys that we work with. One of them is Sarah Hanks. She runs a company called CrowdCheck. Fantastic. And another one is Jeff Marks, unrelated to me, same last name. He's a corporate attorney, securities, understands this whole world. And many other attorneys as well we work with who are helping their customers raise capital.
Terrific. So now it's time to look into the Marks crystal ball. We always love to kind of peer into the future and hear predictions from people who are positioned to have something to predict. So looking, say, through the end of 2019 into maybe even the end of 2020, what do you see coming around the bend, either in your world, in related worlds, and having to do with the democratization of finance, whether it's in the security token or strictly in the equity crowdfunding area? What do you think? What are your predictions?
So I think the prediction here in the next 5 years is equity crowdfunding goes mainstream. So it's no longer viewed as an alternative, kind of quiet, on the fringe, on the edge. It's actually mainstream. And that means millions of Americans are going to take some of their capital, whether it's through their retirement accounts, through their checking account, some form of capital. They'll invest it directly in young companies, early stage companies, real estate, exciting opportunities, well-diversified opportunities for them between their current account, their retirement account, and that to them is an important form of their capital portfolio. At the same time, they still will own ETFs and they will own mutual funds and they will own other things, but we believe that there will be a movement to have some form of capital in that world. And we want to be the leading company to provide that form of capital investment.
I love it. Well, reminder, 10,000 companies, $10 billion, 10 years, right? So Howard Marks, co-founder and CEO of StartEngine. It was great having you back. Thanks for joining us again.
Thank you, Adam.
We wish Howard and the whole team the best of luck, as usual. StartEngine is a gold corporate member of the Security Token Academy. To learn more, go to our website, securitytokenacademy.com, and click on the Directory tab and select Corporate Members. For everyone here at the Security Token Academy, I'm Adam Chapnick. Thanks so much for watching.